Good morning. Happy Friday. All right. So first thing comes to mind when I look at what's happening here is like, bears, is that the best you can do? I mean, this is like being at the 1 yard line with, a line full of 350 pounders ready to cross the goal and blowing it. So we'll see where today ends, but so far, what we've talked about this week is staying in the lower half of this red bar. So far, it's there, but 4 days of attempting to go down, and we've got what I call a Christmas tree kind of pattern here of the red, green, complete retracements back and forth, directionless. But at this point now, taking out these highs, and you can see here on the 60-minute chart, I mean, it looks like it's right there, or just kind of maybe tickling just above. In any event, the door now is open to crossing the other way for the bulls, meaning now they're going to enter the void, and they've got a retest pattern here, or let's just say a sideways trading range, where they've tested the low, coming back up to resistance, and now it's, whatever minutes to close, and they have to hold the line here. So one of the things to keep in mind that these markets like to do, futures markets, equity futures market, is, it goes from the bottom of the range. It's right there. It'll tick up and just suck in traders and then come right back in again. So, be cognizant of that. Don't be so ready to jump in here in the first minute or two and get caught, or 5 minutes. Let it chop, let it do whatever it's going to do, and see if it can hold. In other words, let it try and dip down. Look for a red bar that's ignored. Some attempt to push it to the downside and then reverse back up again, and then enter this void, which will provide opportunities on the long side where the momentum should pick up. Now, what we have here in opposition is kind of an odd situation, honestly, where you have the daily chart chopping along the bottom of a bearish wide range bar, and where longs got caught on a really nasty bear reversal here, versus a bullish reversal where the last 2 weeks are consolidating at the top of a green bar. So, okay, Ladon, awesome. And so now who's going to win? So theoretically it's the higher time frame that wins, but it's had a pretty good run over 10, 11 weeks or so up into this resistance area. That's it, guys. This puppy's making me nuts. I'm trying to eat through my internet wires and computer wires. You can give it a million toys, but it would rather destroy the internet. Oh, anyway. So here we go. Let's see if things can get going here on the long side now that it looks like that opportunity is there, and the chance to go lower, has been had and missed. Now, that's what we have here pre-market. Now we'll see what the day is going to bring. So now we look across other markets to see if they match, and the NASDAQ futures don't match quite the same. Sometimes they do. Here they don't. Up against this resistance here. However, you still have those several attempts to move down and a failure to do so. So is this enough to get things going? Now, there's enough information to consider that possibility. Now let's see how far it goes. As it hits resistance, what it actually does. The Dow here has just been in this trading range. It certainly doesn't look as good, and the reason being is that when you have a range like this and you get above like the initial part of the resistance, and you've got the next part of the resistance sitting right there in your face, you don't have much of a void. Now, for an intraday trading opportunity, I'd say that there's enough, but there's better choices than this, such as the S&P, which is a lot cleaner and clearer for its ability to do that, and even opposed to, the NQs. So, take that as, your choice if you're going to be trading there. But individual stocks clearly can look completely different. And the Russell, I don't have the futures on here. I never traded them much, even when I was trading the equity futures all the time. But, they do offer, if you like to trade the Russell futures, they do offer more volatility a lot of times, so a bigger bang for the buck, and that obviously goes in the other direction as well. But this is pretty much a mess going on here. Lower highs, lower lows. It's grinding up in here, but look at the depth of retracement into the red bar. It's gotten further. It's pushing up here, and it has a small void as well. But it's going to, assuming it keeps going up, it's going to bump its head up against that moving average, that congestion that's right here. But intraday, you can see there's very little. But again, it's in a downtrend. So sellers typically come in before resistance in a downtrend. And bearish traders are going to be more aggressive. And that's what makes the next lower high versus an ability to retrace deeply into the prior high, which then puts the downtrend in question. Right? Common sense. No fib lines needed. No oscillators, just plain old common sense. If it's in a downtrend and makes a low and you can get close to this dog, I'm going to kill it. Pulling my monitor wires out. Wow. Anyway, now I can't see. All right. So I guess you guys can still see that. There we go. All right. Again, as I was saying, common sense here, the deeper something retraces to a prior high, the more that trend is put into question. Yeah, Pat, I hear you. I guess puppy proofing, right? And here we go. Bonds pulling in a little bit, but big breakout. Let's look to the left here. Plenty of room. There's the void concept. Plenty of room to continue to move up. We talked earlier in the week about yield curve inversions, which have started. And, while this is pulling back a little bit, that'll kind of ease concerns in the equity markets as bonds pull back a little bit and maybe give bulls a little bit more confidence to step on the accelerator here while they have the opportunity to do so. Gold, just really whipping around. Okay, hot sauce. All right. Those of you in YouTube asking, what am I talking about? I'm not putting hot sauce on my eggs here. I'm being told by someone in the chat room here to coat my wires with some hot sauce. I know they have this bitter apple stuff for that kind of thing, but we'll get by. All right, so gold whipping back and forth here. And as mentioned yesterday, the gold miners were looking pretty darn good until yesterday. They started to head lower. So more whippy price action. And now, with the gold miners, we've got a trading range. So back to sideways there. And oil, bull trend continues. Move up here and just looking for those energy stocks to find some legs and join the party. Just look at XOP. Sometimes one of these other ETFs look different or better, and they're not going. OIH, same thing. So, theoretically, they should find some legs to move up here as long as oil stays higher. Well, you know, maybe it goes there or beyond. It is an obvious line in the sand, but this is one of those situations, right? Alex is saying the 200 MA. Well, you know, 200 MA, a whole number, but there's nothing to the left here. So this is what makes moving averages subjective as reference points of support and resistance. They're the only real support and resistance is based on price, and this is in a void. It doesn't mean it won't stall there, because certain things like a 200-day moving average on an index or a futures chart like this become a self-fulfilling prophecy where they hit that and everybody's looking at it, and then there's this reaction, and then there's the whole number. Now, all that being mentioned, it's very different. Let's just call this the finish line for the moment, assuming that it is. It's very different to hit the finish line if you start the race and you sprint it to the finish line versus, you know what, let me sit back and rest for a week or so, regain my energy, have a nice cool drink, and now let's go head toward the finish line and maybe go beyond. So two different scenarios that you have to consider, even if there was real price resistance there of any significance. Did it run the race at full speed, or did it sit there and rest and have that, you know, relaxation and cool drink and then say, okay, let's see if we can blast through this thing like it isn't there. Now we wait to see the reaction as to what actually happens. Right? So this pattern is suggestive that, okay, it'll hit it. Everybody knows it's there. And then it should be able to push through because it's in a bull trend. Now, we make some assumptions, right? We all have to have assumptions to place trades. Well, a better word for that would be bias. So once we have our bias, we then go to our plan on how we manage. So as it moves up, I can start trailing prior bars lows. I could maybe in this scenario give it a bit more room. Maybe I could sell half up there if I'm long and put my stop under this swing and then let it do whatever it's going to do up there, because none of us know what it's going to do when it gets there, whether it just blasts right through it like it's not there, which would be powerful information, whether it stops before it and a red bar ripping right back down before it gets there. That's all the bar by bar analysis that provides us information about what is in the moment versus looking at the past, creating a bias about what possibly may be. Right? So with that being said, I'll hand it over to Mr. Dan Gibby, who will review the gappers and open positions, and hope that's all been helpful and that all of you in YouTube have a fantastic weekend, and we'll be back next week. And for those in the green room, we'll be here with you throughout the day. You're welcome.
Hey, good morning, folks. Yeah, so we said yesterday, I said I have zero clue which way we're going to break and from these three bars, but that I would trade it up or down, either way. Now we're going up. You know, and I like Greg's advice, you know, don't rush into it. Let's see if we can get some type of breakdown failure. We'll see what happens in the first 30 minutes, but this is a bullish pre-market 15-minute chart. Bulls are definitely in control right now. Let's look at opens as always. Starbucks covered call. We'll just let it get its sign today. Cat We have a call spread that expires today, as well as one that expires next week. And it's the 135s. So even gapping up here a little bit, this is the melting ice cube. And we've already tightened the stop to lock in a gain. XBI, we have a call spread. I don't like yesterday's 50% retracement and gap up here today. Facebook, we had a put spread, and it went against us yesterday. I was prepared to leg into an Iron Condor, but we gave it 5-10 minutes, and we said do it under the low. It never triggered, so I like today's gap up. This is actually a huge 15-minute bullish reverse head and shoulders right now. Left shoulder, head, right shoulder, now gapping up to the top part of the neckline here and going sideways. That's a day trade setup right there. Papa Mike, we stopped out of our short stop, got a nice profit. We still have the call spread on. Cron, we have the call spread on. Microchip, we have a call spread on for next week. CPRT, we're long stock, and that's it. Kind of light on inventory. Let's look at a couple carryovers. ADI is a short watch under the low. NSC, trader mentioned yesterday, I'd like to get a pullback or a 1, 2, 3. FND, actually, FND might have triggered into the close because I gave it over the high. So that looks great. Nice close. J&J's on my list. I'd like it to go sideways again today. And the beautiful weekly right there. And a mountain. Alex mentioned into the close. Whiskey, W, bearish 1, 2, 3. That's on the day trade short watch. This EHTH, I actually canceled because it was spready, but it's setting up here again. This was the one I did a video on Tuesday over the high. It never triggered, but nice close. It's still bullish, daily, weekly, monthly. VJET gapping up here, but I don't like the way that trades. Possible put spread candidate, GLPG, gapping up to 110 and change. This looks like an ADR. I don't like the way it trades, so it's a mess. BlackBerry, didn't know they were still in business. $10, bullish gap here. Keep an eye on it. RBZ, looks like one of those penny stock toys, no interest. Wells Fargo, Wall Street Journal saying the CEO is stepping down. And, a lot of these banks were set up, for day trade longs. They're still damaged on the daily and weekly. This thing's getting its clock cleaned down here to these prior lows. So if the gap is so big, I have it here in the bottom right, then we will see what it does. But my bias is more to sell a put over like a 30-minute high, depending on setup. BABA 180.55, it's gapped in the top end of the range. PRGS 47 bucks. Wow, that's a big gap. Nothing to do with that. AZN 40 bucks, way down here. That's a ADR, foreign stock, AstraZeneca. Bearish stock, but that's pretty big. KMX had earnings, 66 and change. Now, I have no interest in this. Run it, see it's extended now. Extended, now you're gapping more. If I had to do anything with that, I would look for a short day trade setup, VNE. Today's Friday under Wednesday's low. Looks like it continued, a short. Today being Friday, option expiration day, we'll be looking to sell calls or puts that expired today, if there's juice, if they're liquid, and a good pattern. J&J mentioned already, WBC, that was yesterday, the nasty gap. ACN was a nice gapper trade. 40% tail, but still bullish. That's worth keeping. I'm not chasing that. Valley. Alex, I have to see how it sets up here. Oh, if you're talking about today, you aren't going to get any juice though. For $5 away, good luck. You're going to get like 3 cents. Philip, if you can put your drop down to everyone. Philip's asking, did you actually do the Domo put spread as proposed on the 26th? Yes, we did, and it stopped out. Yep, we took the stop. Sure did. That was a failed pattern, topping tail. I said in the nightly video, take your stop, because if this fails, it's going lower. Trader, you posted something in the Facebook group. Let's take a look at those. And anything else, because I'm kind of done with gappers and opens. So if you all have anything. I'm looking at your list right now. What is Facebook group? It's Master Trader Facebook. Just go find our group, and you have to ask for consent to come in. TRP. So Paul's post said President Trump plans to sign executive order to speed up pipeline development. Axios reporting, you mentioned these 3 stocks. That's a bearish gap down under, breakout failure. So, the implication is if he's speeding up the pipeline, then that means that's good for business, and that we're looking for bullish trades. That's the implication. Yeah, Christopher, you don't need it. It's just there. People can ask questions. We post charts and lessons and things. So it's just a bonus, not required for anything. So I got no interest in this one. KMI, it's gapping at $20. No interest. It's in a trading range with climactic topping tails on the weekly. Got no interest in that. LNG, no interest. Look at those overlapping bars. That actually, Greg, that should be in your seminar, of a picture of the absolute worst looking buy setup possible.
Yeah, it's pretty whippy, something like that. But if it went sideways for a couple of days, the market's very different, but because it, at the bottom of a big ugly bar, but something like that, if it went sideways for a couple of days, would be attractive. Just needs to clean up.
Right. I mean, we like nice controlled uptrends. We like controlled pullbacks to minor support. This is just a picture of overlapping bars. It's just a total mess. All right, less than a minute to go. Anything else on your hit list here? I kind of went through all mine. All right, let me look. Now our cat is actually gapping over the stop for the weekly.